Hey, it's Michael Saul, but everybody calls me Tiny. This video is Be Prepared, but Don't Guess. This is stock market analysis for the week of July 29th, 2019. So, just to be crystal clear, in the first 10 seconds of this video, I am not calling for a bear market here. I am not calling for a huge correction here. However, I believe it is time to become a little bit extra prudent. I don't even know if you can be extra prudent. I think prudent kind of encompasses the whole definition, right? But I think it's time to really be prudent here and watch the market for a pullback. Again, not calling a bear market, not looking to get short here, but I have said it multiple times, when we see new highs, to me, that is a management sign, not necessarily an initiation sign. We're up at new highs here in the S&P 500. Next resistance is up at 305, about 1% from here. We are grinding, so that's good. Okay, I've said it before. The strongest type of market is a grinding market, not one with big volatility spikes either way, or not sustainable markets. Don't do that, but they grind, and that's what we're doing here, so that's good. However, I would not put it past what I'm seeing here in some of the proprietary indicators I watch. I share them with the inner circle. I'm looking for a possible pullback in August. Again, I'm not looking to get short here, okay? But it is time to manage. Trail stops. I know I always say that we should always have a good money management strategy. We should all be trailing stops. Regardless, it's time to probably get a little bit tighter here. Okay, here's the Dow. Dow is in a bull flag, not up at new highs. Here's the Russell, and I want to talk about we'll go to the NASDAQ last, but you can see the Russell here perking up, but still in its range since basically February. Could the Russell play catch-up? Absolutely, and if the Russell does play catch-up, then the market will more than likely continue to sustain the upward grinding motion, the broad market. Okay, the mid caps are holding out. Holding up a bit better. Okay, so positive sign also. But we want to see the small caps and the mid caps. Small caps tend to come in at the end of bull moves. They tend to get a bit parabolic because people are like, well, we're all invested in all this, the big stocks and the ETFs and everything that encompasses the indexes. How am I going to get alpha here? Well, here's how you're going to get alpha. You're going to get alpha by playing the stocks that not as many people, are involved in, something like the small caps and to a lesser degree the mid caps. But you can see the mid caps are kind of waking up a little early here, earlier than the small caps. Just something to pay attention to. Here's the NASDAQ. Next level for the NASDAQ, this is the QQQ, so it's the NASDAQ 100, would be 200. Again, nice grinding action, so it's good. It's just there are some things that are setting up here that are telling me, hey, you know what, we could be due for a pullback. Again, I'm not guessing at it. I'm not saying it's time to layer on the puts or anything like that. You can get carried out in this market trying to guess when a bull is going to stop roaming, and that's not something I want to do, okay? Get carried out at least. Here's the semiconductors. Semiconductors were a really nice move. The end of the week, though, you can see here a couple of pause candles. Let's see if it pulls back, fills the gap, or maybe just coils here and decides it wants to go higher. Here's KLA Tanker. I mean, wow, underperforming for a little bit and then played that catch-up, pivoted right off of 102. What a nice move here. Look for a pullback/pause here, but with this kind of momentum, we're looking for a continuation pattern, not something too short. Here's NVIDIA. Okay, so NVIDIA finally above its 200-day moving average since being below it in October. It's trading below it, in October of 2018. Let's see if this coils. This wants to get to the top of this range up here at 193. 193, I said. It's 3 is the right way to say it. All right, here's Intel with a nasty candle on Friday, so we want to see where this leads to, but also has a little shot of momentum here that you saw in July. Let's see if that continues. How about the banks? So the banks are starting to wake up, and we talked about this. If you look at the previous videos from the last few weeks, it was coiling up here, and it was above the moving averages, so we were waiting to see if it released. It does release to the upside. Here's Bank of America. Looks like it wants to head up to these highs from summer of 2018. Here's Citigroup, which I had highlighted as showing good relative strength, but now all of a sudden it decided to, hey, let's wait till the other stocks catch up. Still one that I would focus on, though. Citigroup doesn't look that bad. Neither does JP Morgan, if you're going to play the banks. Okay? Here's, where is the, I don't know how to spell XBD anymore. Here's the broker-dealer. They're starting to wake up a little bit. Here's Goldman Sachs, also pointed this out, I believe, in last week's video, starting to get a little bit of participation, a little bit of money flow into it. Watch the 234 level. Here's Morgan, also perking up as well. How about the biotechs? Yeah, biotechs, leave them alone for now, not really doing that much. How about the glamour stocks? Oh, you got Amazon. So Amazon with the not so nice day on Friday, but it did form the doji. If it does pull back, watch the 50-day moving average. If it pulls from here, though, off of this little ABC, watch to see if it can turn and head back up to the highs. Before we continue with the glamour stocks and then look at the bonds and gold and oil and everything, if you would like to receive intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions, and you'll be on the distribution list. Facebook group is at facebook.com/attackthemarkets. If you like what you're hearing in this video, and come on, you know you do, give me a thumbs up and leave a comment so I move up the ranks in YouTube. And to never miss a video when it's uploaded, all you have to do is click the subscribe button, smash the bell, and you'll be notified when a new video hits this channel. Whew. Okay, Apple. So Apple is trying to grind up. Don't really love the Friday candle, but it's taking its time grinding up here. Here's Alphabet with a big pop-up on Friday, but the reversal. I'd give this a couple of days to see where it wants to go. Facebook. Yeah, Facebook with the nasty day on Thursday. So this may need a couple of days to kind of work itself out, but it looks like it may want to head back to those highs here. Just give it a little bit here. It doesn't have a buy pattern right now. Here's Netflix with the gap down and then the bounce into the 200-day moving average. Does it pivot from here or does it get through? Good to pay attention. Here's Disney headed back up to and hopefully through the highs. Full disclosure, my kids do own Disney. Can't pump and dump a stock like Disney anyway, and they really don't own that many shares. They were gifts from friends and family. And then I'm not looking to sell their Disney stock. Just wanted to disclose that my kids do own some. All right? Okay. Let's take a look at bonds. So bonds coiling up for their next move. Right now, based on the position of the moving averages, I would think it would be higher. So we want to see, want to watch that. Here's gold, similar. Popped up to a new high now, pulling back to 20 EMA. Let's see if it pivots and tries to make a run here. And oil. Is oil going to fall? It is below the 200-day moving averages, but it's more in a balance here or a range. So we want to wait to see which way it tips its hand. So let's do the recap. Up at new highs here. I look at new highs as a place to manage, not necessarily initiate. Think it's time to be prepared for a possible pullback. Not looking for a bear market, not looking for a correction. If the small caps decide they want to play some catch-up, I think the market's going to continue to go higher. But nothing wrong with being ready. That's what being a trader is. There's so much complacency here. I've read the investor polls, and everybody's so freaking complacent. I mean, it's just ridiculous how complacent everything is. And, everything's going to be fine, and Trump's president, and the market's going to go higher. And, look, maybe it's all true, right? But you know what? As a smart trader, which you are because you're watching videos like this one, not saying this is the only video that you have to watch to be smart, that makes you a smart trader, although it helps, right? But you know that it's always good to protect the profits and always be ready. And yes, I know, I always preach money management. We should always have stop loss and always use money management. I just think now it's time to get a little tighter here. And it's the summer. It's real easy to spend time at the beach or go away. Or I'm not in front of the computer all the time. You don't have to be. But just pay closer attention here. Yeah, I know. It sounds silly. We're up at new highs. Why should I worry about a pullback now? In my opinion, that's the time that you should. Questions? I got answers for you. Just write me at tiny@attackthemarkets.com. Give me a thumbs up. Leave a comment if you like what you're hearing. Hit subscribe if you want to be notified when a new video is uploaded, and join the intra-week update list at attackthemarkets.com. Have a great trading week. I'll talk to you in the intra-week update or in next week's video.